Hi, welcome to our weekly Forex and Futures forecast. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. We've also got our third book out. We're very excited about this. It's a very important book for us, very heavy book, Risk Tolerance Threshold Theory. Hey, let's get right to the markets. First market we're going to be covering is the Australian US dollar. You know, it was a bit of a game changer last week. You shifted that day-to-day pattern back higher in line with that all-important secondary and primary pattern. So you have all your tradable patterns aligned higher here. That's a tough market to be short, and let me tell you, our benchmark did pretty good last week as far as just taking trades on the buy side. Intraday, there was a lot of opportunities there. So coming into this week, we're going to do more of the same. We feel strongly the secret to trading is in the repetition of the market. So you've got a market stronger, market that's rewarding longs. We would look for that to continue to do the same. Next market, the Euro US dollar, and here's a completely different picture. And you know, we understand that you don't always get the biggest moves when markets are aligned against each other. We call that negative interference. For example, all the trends are up in the Aussie, but a couple of very important trends down in the Euro. In fact, the majority of your trade, what we call tradable patterns, are still down in the Euro. So that being the case, the majority of patterns down in the Euro, up in the Aussie, that creates interference. So we're not looking for the biggest moves in that type of environment. You're going to get bigger moves when markets are aligned. As we said, important patterns down, primary down, day-to-day down, your micros are all down, majority patterns down. However, you're sitting right on top of very important support. That's secondary pattern support. We'll show you where that line came from. That's the 50% retracement of this entire up move, which started what we call the Draghi rally. Mario Draghi's rally, which started all the way back last summer. So you're parked on a 50% retracement of that. You know, we said last week in the report that all things being equal, we're pretty bearish on this market. But as bearish as we are, if we do believe this is the beginning of a new down move, which we do, and let me put it this way, even though we think this is the beginning of a new down move, you still have to consider that markets are going to retrace, markets are going to correct. So we ended last report saying, yeah, you'll probably, we're looking for a potential correction higher in the Euro. Nothing's changed. We're still looking for that potential correction higher. What had happened is the market gapped lower on last Sunday. As a matter of fact, a week ago, the market gapped lower. But guess what? It ended up going sideways all week. Easier to see on a 4-hour chart. You actually ended up closing higher than where it opened last Sunday. So despite all the bad news in Cyprus, the market ended up closing higher for the week, and it still hasn't closed that gap. So, from our perspective, not a whole lot has changed over the last week. Despite that big gap, the market kind of went nowhere and ended up closing a little bit higher. So we're still in that camp where we're interested in seeing a correction higher. We're not interested in playing that. We're still interested in selling rallies, but we're just interested in selling bigger rallies. We don't want to participate in the long side because the day-to-day news flow is so bearish in the Euro. Fundamentals very bearish. We're not interested in participating in risking going long. We'd rather sit it out, wait for a bigger rally to sell. That's all. A bigger rally in Euro, potentially in sympathy with that up move in the Aussie. So, you're not looking for the biggest moves because the Aussies, everything's up. The Euro, everything's down. That negative interference kind of offsets things. However, that's the environment we're in. And if I had a gun to my head, I'd probably think that you see higher Euro prices in sympathy with that strong trend in the Aussie. Also in sympathy with the strong trend in the other markets too. Your alpha market, your stock market, of course. Here's dollar yen next. Dollar yen. We're anticipating dollar yen finding support, pretty significant level right there, 93, just below 93.70 or so. That's a significant 50% level there. You can see a nice trend line coming up too. Long term, this market's pretty strong. It looks short term, your momentum's down. You see your momentum indicator pointing down. That doesn't mean a whole lot to us as long as that pattern is bullish. I think to really get scale here, you have to look at a weekly chart, even a monthly chart, to get some scale here. Here's the weekly chart. You can still see it's straight up, but boy, it's tricky to try to pick tops in these markets. Here's the monthly chart, and there you go. You could start to see, well, yeah, that's a big sharp up move. On the other hand, it could very well have some more room to go. You haven't even retraced half of that that last big bear market. So we still think there's room up above here, and as long as that day-to-day is pointed higher for us, as long as the intraday micro patterns are higher, that day-to-day higher, just no reason for us to go after the short side. Next market would be the U.S. stock market. Here's a bullish market. We think this supports higher Aussie prices too, potentially even a short covering rally in the euro. So here's your daily chart of the U.S. stock market. There's the all-time high. We've said it a number of times. You get that close to an all-time high, you're generally gonna go for it. You know, you can see price action supportive of that. You had a big turnaround on Friday, so this pattern's still very much bullish. You have those all-important long-term tradable patterns higher, so we think you'll see continued higher stock prices that potentially supports a firmer Aussie, as I just said. Next market will be the gold market. And we'll wrap it up with the commodities or the gold market. Gold in a precarious situation still. We think that you use that purple line. We think that purple line, which is a 50% retracement of this most recent impulse move down, you take that impulse move down, has not been able to retrace 50% of that. We see resistance right there overall. We think if you're holding gold long term, that's not a bad plan, though you may want to consider that purple line to hedge out of some of that. So you may want to consider taking downside protection by perhaps buying puts or even selling some futures against that line to protect your long-term gold holdings. Otherwise, it's hard to get excited about the upside in gold until at the very least it takes out that purple line and then perhaps, well, realistically gets above this trend line too. You've got to get above that trend line before you can get excited about buying dips in this market again, and that's just where we stand. Hey, we took a look at the corn market last week. Let's wrap it up with that market. Corn's a very important market. It's a feed product. We're looking at commodities. We're looking at corn similar to gold. That if you're holding corn as a long-term investment, not a bad idea to perhaps hedge at these levels that we're seeing now. You know, the correlation is broken down between asset class markets and commodities, as I'm sure some of you are aware of. But there's still a pretty strong correlation amongst commodities amongst themselves. You can see corn and similar to that gold chart too. So we think that's not a bad area to start to hedge up some of those commodities. We don't think there's much upside left in the commodities. And you know, the gold chart said it all, as does the corn. You see very definitely a pattern of lower highs all along. So, hey, that'll do it for us. Thank you so much. If you want to know what's going on at Trading University, come and visit our site, trading-u.com, where you get everything for $199 a month. That includes one-on-one mentoring and that Skype chat group. Maybe you don't want to try out the whole program, but the mentoring, etc., you can open a live account with Forex.com, FXCM, Open eCry, and get the master's program for free. Just go to EOS Trade and see how you do that. You do not, however, get the one-on-one mentoring and the Skype chat group through EOS Trade. Hey, thank you so much, and we'll see you back here next week, and everyone have a good week. But I stand corrected. We will not. We're taking a week off. We've got a spring break coming up, so it'll be 2 weeks before you see it, and we look forward to seeing you then. Thanks now. Bye-bye.